Hello traders, welcome back to RN Isaac Githinji FX. To our new subscribers, thank you for joining us, and I want to officially welcome you to this great family. To our returning subscribers, thank you for your great support. We are growing on well, and today I would like us to continue with the lessons that we left behind about the forex classes for beginners. And today I would like us to learn something new. And before we learn something new today, I made a video yesterday about Euro USD, USD CHF, USD JPY, and I told you guys that sell Euro USD to around 0.83 0.8300. If you can remember, if you have not watched that video, please go and watch that video. The price has reached there. Also the price has reached to my target USD JPY. It has hit our USD JPY target. Maybe we can go and see before we continue. So I call the short. Let's start with the USD JPY. USD JPY, guys, I call the short, and I told you we are buying USD JPY pre presidential election in United States of America. So I call this short. So guys, I call USD JPY. I told you to buy USD JPY to around 153, and the reason why I told you to buy, there was a gap. Let us go to 1 hour time frame. There was a gap. Let us go to 1 hour time frame, and you can see exactly the price has done that. And those who followed my analysis, or those who watched the video yesterday, I told you to buy from this area to this area. You can see, so the price has filled this gap. There was a gap here, and the price has filled this gap to around 153. Can you see exactly 153 there? So it has filled this gap. If you can remember, those who have not watched the previous video yesterday at time like this, I just made a United States pre-election analysis, and I told you to buy this pair. Another pair I told you to buy is Euro USD, Euro USD. I told you to sell Euro USD, and if you can see very well, I told you to sell Euro USD to around 1.08300. You can see, guys, it has done exactly like that. Even it has went ahead and take the liquidity at this level, okay, at this level. So we have managed to sell this. So those who followed me, those who followed my signal, you have managed to secure a big profit. And I told you, go watch my video Euro USD. I told you that once the Euro USD will break this level, if you went and go and watch that video, I told you we had an orange line here, which is a trend line, and I told you this is the zone that we are going to have a fake out. Okay, so and we sold immediately. We sold. So I'm expecting this price to hold. If this price will hold from here, okay, now I'm expecting this price to do what? To buy. But we shall still watch this pair, because this week I'm expecting there shall be a lot of volatility, since we have a US presidential election, and also I'm expecting there is a news that we are expecting this week. So we shall watch this pair. Watch this pair. I'm going to buy this pair if it will come back to this zone. Okay, you can see this yellow trend line. If the pair will come back to this zone and retest, now we shall buy that pair up to this zone, up to that zone. That is my plan. But for now, we are going to watch this pair. So those who be asking what is next about Euro USD, let me just do a quick analysis. about Euro USD. Those who be I know those who will be asking what is the next, what is the future about Euro USD. Okay, so Euro USD, I'll buy this pair once it has retest. Let me show you. I'll buy this pair once this price buyers are able to break this. Now the reason why I put it in a blue rectangle is because I'm expecting this, once it is broken, to act as a support and to buy. So I'm expecting the buyers will pull this pair back up to there, then reclaim this. You see this trend line, it will reclaim, and then I will buy from this point, from that point to our general TP, to our overall TP. That is my expectation on Euro USD. Are we together, guys? So that is what I'm expecting. That is what I'm expecting. And doing so, this will be now a fake out. This will be now a fake out. But I want you to watch careful, because we shall have a lot of volatility and a lot of what? And a lot of fake out. So this one will be a fake out. This one will be a fake out. The reason why we dropped from this area to this area, we were to fill this gap. We were to fill this gap. And I can foresee something that we might raise back and not be given a chance to enter. Okay, so the buyers might bring this price action up, then retest, then we buy. So another pair I told you to buy is USD CHF. Let us do a quick follow up before we continue today's lesson. So you can see, guys, I told you to buy from here. If you have not watched, I told you to buy from this blue zone. I told you to buy from that blue zone, and I told you that this now will be a fake out. Can you see? It will be a fake out, and I told you to buy from this blue zone to around 0.8700 to fill this gap. Has the price touched that zone? Of course it has touched. Okay, it has touched at exactly 0.8700. Exactly at 0.8700. So guys, I will do a follow up. I will do a follow up on the three pairs. So today I want us to learn something for the beginners. For the beginners, let us learn something. Let me show you. Let us to learn something as I promised. Let us learn something that I'm going to show you. I remember I promised you guys that I'm going to show you the previous lesson or the previous class. I showed you my setup when when I'm analyzing the market, and this is just a recap. I showed you how to draw an internal and external market structure, and I told you that my external market structure, since I am a swing trader, I usually look at the higher time frame. My higher time frame is weekly and monthly. Okay, my higher time frame is weekly and monthly, and I told you guys the setup that I usually watch. And one of the setup I told you is about the double top, the head and shoulder, the inverse head and shoulder, and the double bottom. If you can remember, if you have not watched that video, please go and watch and rewatch that video. Or if you have not understood what I told you, go and rewatch that video, and I'm sure you're going to understand. So today I want to show you how manipulation works. Are we together? I want to show you how manipulation do work. So if you are expecting to buy, for example, if your higher time frame is bullish, that is, your external market structure is bullish, and then your internal market structure is now bearish. Okay, your internal market structure is now bearish. So you know what I mean. Your internal market structure is now bearish. If your internal market structure is bearish and the external market structure is bullish, that means that we are now in the retracement. Of the higher time frame or the external market structure. So how are we going to change from bearish to bullish? Okay, how are we going to change from the internal market structure and to join the overall trend? That's what I'm telling you. If you know how to intermarry this external and internal market structure, you are now going to be a profitable trader. That's what I told you. This is just a general recap. So today I want to show you how manipulation works, so that the power of this strategy or the power of this concept will make you to be a safe trader, to be a profitable trader, and to be a safe trader. Okay, if you know what I'm going to teach you today, if you understand what I'm going to teach you today, I'm sure you will be a profitable trader, you will be a very safe trader. You know where to enter, you know where not to enter, you know when to stay out the market. Like yesterday I told you guys that we shall expect a lot of volatility. Okay, so this is now our internal market structure. Okay, so, and I told you, if your external market structure is buy, if your external market structure is bullish, so how do we change from bearish to bullish? How do we shift the structure from bearish to bullish to join the overall trend? So how are we going to change from this, from the at the end of the retracement in the external market structure here? Okay, now it will be here in the internal market structure to join the what? To join the overall trend. Okay, to join the overall trend. So, and I told you there are things that I look for. One of the pattern I look for, or setup I look for what? I look for the double bottom. If you are expecting a bullish change, I look for the double bottom. And let me draw for you a double bottom. I told you a double bottom is like a W. Okay, it's like a W. And please teach yourself or practice to see this pattern. They are very, very powerful. Okay, double bottom. I told you a double bottom like that. Okay, and you know the features of double bottom. I told you it must have two legs and the neck. Okay, and I showed you how to trade a double bottom. Okay, I told you once the prices break the neck, once the prices break the neckline, this is what I call the neckline. This is what I call the neckline. Once the prices break the neckline and it retested the distance between the two legs and the neckline, that's how far the price will go upward. Okay, that's how far the price will rally upwards. Okay, so this is what I told you. This is what I told you. If you can remember, that's what I told you. And I told you TP1 is always a guarantee. Take TP1 at the half of that distance. Okay, the distance between the neckline and the two legs, this distance. So the price will rally up that distance. Okay, and I told you take the half of that distance as the TP1, as the TP1 is always a guarantee. Okay guys, and I told you once the TP1 is broken, continue to take a TP2 until we finish that distance. So another pattern I told you is about the head and shoulder. It's about inverse head and shoulder. Inverse head and shoulder. I told you, if these two patterns, if you see these two patterns and you're expecting a reversal, okay, if you see these two patterns and you're expecting a reversal, they are very powerful. If you know how to trend them, they are very powerful. Okay, they are very powerful. So your work is to teach yourself how to identify this pattern. So the features of inverse head and shoulder, we say that it must have the right and left shoulder, and then we must have a head. And the price and the neck, if you can remember, and the neck. Okay, so let me show you what I mean. If you have not watched that video, today I'm going just to be brief. So this is the right shoulder, and the left shoulder and the head. This will be our neck price. Okay, our neck price. And once the price has broke our neck price and the retest, the distance between the neck and the shoulder, the price will go that distance upward. Okay, the price will go that distance upward. Take a half of it as a TP1, and then continuation will be TP2. Are we together? And I told you, if you are an aggressive trader, you should buy from the neck, put your stop loss in the head. Put your stop loss in the head. So I want to show you how manipulation occur. I want to show you how manipulation do occur. This is what I want to show you. I want to show you how this manipulation, how we are now changing from a double, you see, it was a double bottom, now it has changed to do what? It has changed to be inverse head and shoulder. So I want to show you how this will occur. Okay, I want to show you how, so that you should be very vigilant and very careful when you are dealing, or when you have seen that pattern. So how does it occur? For example, let me draw. So for example, if your point of interest, your higher time frame, your point of interest is there, you're expecting a change of reverse or change of character at that point. Okay, now that point will be a blue zone, to act like a support. Okay, so if you are expecting to have that the price, once it will come, retrace back here, and then we have a reversal upward. So let's say this blue rectangle is our point of interest. Okay, so for example, the price was bearish like that. So if you are expecting, once the price has touched this blue zone, you are expecting it to rally like that. Okay, you are expecting it to rally like that, to go up like that. So how does it occur? So once the price has reached to a point of interest, remember, you are not the only trader who have seen it. Remember, there are millions of traders in the world who can see that the price, or expect the price to change from bearish to bullish at this point of interest. Are we together? Remember that. And many buyers are expecting to place their order from here upward. And where will be their stop loss? Their stop loss will be below this region. Their stop loss will be below this region. Are we together? So, and this big financial institution, they know that. They really know that. So what they will do, they will play around this zone. They will play around this zone. They will play around that zone, and then they come and fake, and they come and collect all the stop losses. They come and collect all the stop losses here. Okay, they come and collect that stop losses there. Once they collect that stop losses there, either with a wick or with a body. If they collect the stop losses with a wick, we call that a liquidity sweep. We call that a liquidity sweep. I'll be showing you in the chart. We call that a liquidity sweep. If the body will be closed here, if the bearish candle, that is the red candle, we close below this one. Okay, we close below this one, and then another green candle come back like that. That is what we call a liquidity run. That's what we call a liquidity run. Are we together? So there are two ways, and I want you to be very careful. Once the price has reached to your point of interest to buy, be very careful. Be very careful. I will rather wait for the liquidity to be swept, or for the liquidity run. Then once the price come back again to this zone and close above it, now I shall enter. Are we together? I hope I'm clear. I'm clear. So they know very well that many buyers are in here, and they are putting what? They are putting their stop losses below this zone. Are we together? So what they will do, they will collect those stop losses. Remember, your stop losses are your money. Your stop losses are your money. So they will come and collect it. Okay? They will come and collect it, then quickly go above this region. Are we together? Quickly go above this region. So guys, be very careful. And this is how we are going to form a inverse head and shoulder. So they will come, collect that, and then sellers. Remember, at this point, sellers are expecting, wow, there will be two types of traders. One, they are buyers. They are expecting that once the price reach here, the price will shift to buy. And then sellers are expecting, once the price close below here, Once the price goes below here, they will enter for sell from this region downward. Okay, from this region downward. So where will be their stop losses? Their stop losses will be above this region. Their stop losses will be above this region. So what they will do, this big financial institution, they will come and collect the buyer stop losses. Okay, they will come and collect the buyer stop losses and go up again, collect the seller stop losses. Okay, they collect the seller stop losses and continue. So they will come and collect here and collect above here. Are we together, guys? Then we shall find what? We shall find a change of character like that. I hope I'm clear. If you can understand what I'm teaching you today, I'm very sure now you'll be able to trade. If you can understand what I'm teaching you today, I'm very sure now you'll be able to trade. Are we together, guys? So this is how manipulation do occur. This is how manipulation do occur. So they will manipulate the buyers, collect the buyer stop losses, and collect what? And collect the seller stop losses. Are we together? Then we shall find then we shall have what? Then we shall have a character, change of character. You shall have change of character at this point. We shall have a change of character at this point. Are we together? So it is your work to know. I'll be showing you. It is our work to know that blue zone, that blue line is now our change of character. It's now our change of character or market shift structure. Are we together? This is how we have inverse head and shoulder. This is how we have inverse head and shoulder. Okay, this is how we have inverse head and shoulder. So you can see many people so that we have a double top, another double top. So what they will do, they will come and fake it out, and then we continue. So be very careful. So I will rather enter this market after I've seen there is liquidity grab or liquidity sweep. Okay, and then there is what? Change of character. So this should be a safe point. The moment you see there is a liquidity grab and a liquidity sweep, and then there is a change of character from here. Now is the safe place to do what? To enter for buy, and place your stop loss at this place your stop loss at the left shoulder. So that's how we are making what? That's how inverse head and shoulder occur. That's how inverse head and shoulder occur. So let us continue. Let us continue and see how head and shoulder occur. How head and shoulder occur. How do we change head? How do we form head and shoulder? We form head and shoulder, for instance, if your macro or higher time frame is bearish, if your higher time frame is bearish like that, and then your internal market structure, it was what? It was bullish. So that means that in the internal market structure, the price was doing what? The price was retracing. Okay, the price was retracing from the higher time frame. Can you see? So if you see your external market structure is bearish, and then when you go to an internal market structure or to a lower time frame, you see the market is bullish, just know we are in the retracement. So how are we going to change from here at the end of the retracement in the bearish to in the bearish higher time frame to continue? Are we together? How are we going to change from bullish, that is now in the internal market structure, change from bullish to bearish? And I told you guys, I usually check what? I usually check two structures. I usually check two setup. One of the setup is double top, and I told you how to trade double top. I told you how to trade double top. Let me show you a double top. It is simply resemble an M pattern like that. Simply resemble what? An M pattern like that. Okay, so the features of M pattern is we must have the two legs and the neckline. So the way you traded the W pattern, we shall wait for the neckline to be broken, and then the distance between the two legs and the neckline the price will go below that distance. So TP1 is always a guarantee. Take TP1 from the neckline to TP1, and from the neckline to the half of that distance, and then once the TP1 is broken downside, just know that we are going to TP2 to accomplish this pattern. Are we together? That's how now we are trading what? That's how we are trading a double top. Okay. So how are we forming a head and shoulder? How are we forming a head and shoulder? So be very keen. Be very keen. So let's say, for example, if your point of interest is there, you are expecting once the price reach there as bullish. Once the price reach there, we are expecting to see what? To see a shift of market structure from the bullish to bearish. That is the internal market structure. So let me illustrate to you. Let me show you. So you're expecting that. So it's just the opposite of what I've just explained. So for example, in your internal market structure, the price was retracing like that. The price was retracing like that. Like that. So you are expecting once the price has reached here, this is now our supply, this is now our resistance. So you are expecting once the price reach here to automatically go down. Okay, to go down, to change from bullish to bearish. So remember, you are not the only trader in the world who can see this. There are so many millions of traders in the world who expect the same, who expect to sell from this region downward. Okay, this region downward. So what this big institution will do, they will play around this zone. They will play around this zone. They will replay around this zone. So at your point of interest, expect three things to happen. Expect accumulation. This is what I'm calling accumulation or ranging market structure. Okay, expect accumulation, ranging market structure, or consolidation market structure. I showed you how it look like. So expect that. Okay, so expect that one. That is scenario number one. Scenario number two, expect there will be what? Expect there will be a manipulation. There will be a manipulation like that, and then change of market structure. This is now our neckline, and then change of market structure. Once that neckline is retested, you enter. Can you see? That's how a head and shoulder occur. That's how a head and shoulder. That's how we form a head and shoulder. Can you see? So the whole world know once the price reach here, we know that it will automatically do what? We shall have a change of character from bullish to bearish. Okay, from bullish to bearish. So this big financial institution, they know exactly that. So what they will do, and at this point, there are two traders. So one of them is sellers, and another one are buyers. Are we together? So what will happen is sellers are looking for this trend to break this neckline. Can you see? To break this neckline to sell. Buyers are looking for this this zone to be broken. So that they can place an entry from here upward. Okay, so that they can place and buy entry from here upward. And I told you there are two types of liquidity. One is what we call a liquidity sweep and a liquidity grab. Okay, a liquidity sweep is whereby this big financial institution, they only sweep it with a wick. They only sweep the liquidity with the wick and come back to our range. Are we together? So you shall see a sweep of candle, not a body candle, just a sweep. Okay, then the body candle will close below there. Okay, or there will be what? There will be a liquidity run. A liquidity run is whereby we shall see a bullish candle closed below here. Instead of continuing going up, it will do what? Sellers will take control and close below below the below this region. Are you together? So once the buyers have seen that there is a bullish candle has closed above here, they will place their order, their entry from here, and their stop losses will be here. So this market, this big financial institution, they will first collect the sellers stop losses and come back and collect the buyer stop losses, and now continue the trend. Are we together? So where are we going to enter this market? Where are we going to enter this market? We are going to enter this market the moment we have seen this. First, wait for the liquidity grab or liquidity swap. Are we together? So wait for that liquidity run or liquidity sweep. So wait for that, and once we have seen that, wait for the neckline to be broken. Wait for the neckline to be broken. Those who are asking me where is the neckline, those who are asking me where is the neckline is here. The neckline is there at the to the blue line. Okay, so once the neckline has been broken, now we are guaranteed sure that we have finished to collect what? We have finished to collect the liquidity here, and now we are ready to do what? We are ready to bleed. We are ready to sell. Okay, this is how manipulation occur. If you know how this happen, if you master this, I can assure you guys, you are going to be a good forex trader. Why? Because one thing is you shall avoid to be a liquidity. You shall avoid to be a liquidity. So you shall be very patient. Okay, you shall be very patient, and then some things you shall some trades, some of the risk you shall avoid. Okay, you are going to avoid a lot of risk. This is what I wanted to show you. This is what I wanted to show you. Are we together, guys? This is what I wanted to show you. And there is one pair I'm looking for. There is one pair I'm looking for. And this pair, I will show you by an example. I will show you an example of it so that you can see what on the read chart is. So guys, let us do an example of what we have just learned. I'm looking for Euro CHF. I'm looking for Euro CHF. I'm looking for Euro CHF. I want to show you an example of it. Let us go to weekly. I'll be showing you. Let us delete all these lines so that I can show you exactly what I'm trying to mean by an example. Okay, so that you can understand everything that we have just said. So guys, let us delete all this. Okay. So in weekly or in my higher time frame, even you can even if you go to monthly time frame, you can see the same thing happening. Okay, in the monthly time frame, you can see very clearly this market is what? This market is bearish, is going down. This market is bearish. Are we together? So that is in the monthly time frame. Are we together, guys? So let us continue. That is monthly time frame, and you know very well that I don't stay a lot. I don't focus a lot when it come to my higher time frame, since my higher time frame is supposed to do what? Is supposed to just tell me the general direction of the market. So this is the monthly time frame. Can you see, guys? This is a monthly time frame. So let us go to weekly time frame. Before we go to weekly time frame, I want to show you something. You can see the last high that this market formed. It was here. That was the last high. Can you see? That was the last high. This market formed the last high. Okay. So and the last support, Sorry, see, it is there. Can you see? That is the last support. So that's how I analyze the market. So simply that is what I'm telling you. So let us continue to weekly time frame. You can see, if you can see something different. So exactly, can you see? So that was the last high and that was the last low. Let me show you. Allow me to show you a minute. So can you see? So in the weekly time frame, this was the last support, Okay, we can come here. So this was the last high, then it was broken to be, it was broken to do what, to be, it was broken to be bullish, it was broken to be bullish, okay, to be bullish. Then we expected that once the price reach here, we expected once the price reach here, it will do what, it will go bearish, it will turn bearish. But I want you to see very well, I want you to see very well. You can see the moment the price reach here, touch here, it the sellers took control downside. The moment the price touch here, the sellers took control downside. So we were expecting this price to change from here, okay, to change from here to bearish. But what happened? What happened, guys? You see, it was like a double top. It was like a double top. This was like a double top. Can you see? This was like a double top. We had our first leg and second leg. Can you see, guys? But this large institution, they know exactly that. They know exactly that. So what they will do, they will take our liquidity. Can you see? They will take our liquidity here. They will take our liquidity and then come back. What do you see? So the price went, take the liquidity there. This is what I'm calling liquidity grab. This is what I'm calling liquidity run or grab. If it was taken by by a week, this is what I'm calling, this is what I'm referring a week. Can you see this? This is a week. This is a liquidity sweep, like here, okay, like here. So they took liquidity here. So where were we supposed to enter? So once this price, can you see the support, the current support, the current support was here, the current support was here, and then it was broken. Once it was broken, came and retested again. So we could have entered here, we could have entered here. So it was forming what? It was forming a head and shoulder. You see, this is our shoulder, right shoulder, and left shoulder. This is the head. That is exactly how this strategy works. This is exactly how this strategy works. So we continue to be bearish, we continue to be bearish, we continue to be bearish, and we're expecting once the price reach here, we're expecting to see presence of buyers. We expected to see the presence of buyers. Are we together, guys? So we expected to see the presence of buyer. But what do you think? What do you see? You see, the price came, touch here with a wick. This is what I'm calling a liquidity sweep. You see, this is a green candle and a very long wick. A very long wick. This is what I'm calling liquidity sweep. Okay, this is what I'm calling liquidity sweep. So they knew very well the buyers will they will come here, put their stop loss below here. So they came, took that liquidity and went up again. Took that liquidity and went up again. Then the price retraced. Okay, the price retraced back, and currently the price is here. The current price action is here. So I want you to learn something. I want you to learn something. So let us continue in there. Let us see here this price action. Let us see in the daily how it will act. In the daily how it will act. Okay. So I want you to see very well. I want you to see very well. So the market was what? The market was bearish. Can you see? It was forming lower high and lower low. This high was lower than this one, okay? And this lower was lower than this one, okay? So the price, I told you, at your point of interest, this is our point of interest. This is our point, the blue zone. It is our point of interest. At once the price is near the point of interest, it will do the three things I've told you. One of it will do what? Manipulation. We expect a manipulation. If there will be no manipulation, we expect what? Consolidation. We expect consolidation. Okay, we expect consolidation, then manipulation, then we shall buy. So I'm expecting to see those three things in Euro CHF. So let us draw the current support in daily. Let us draw the current support in daily. So this is the current support in daily, guys. I want you to be very sure. I want you to understand this thing. This is the current support in daily. Once you understand this, I'm telling you, you are going to do what? You are going to be a profitable trader. So this is the current support. The blue zone is the current support in daily. The blue zone is the current support in daily. And what do you see currently? What do you see currently, guys? Let me show you. What do you see currently? You can see the price was the sellers brought the price downward, and you can see we have first leg, second leg, third leg. So we have like triple double bottom. We have more than triple, but we have more than double bottom here. So we can see this is the first leg, second leg. Our neck is here. Can you see? This is our neckline. This is our neckline. I want you to be very sure. I want you to understand what I'm teaching. I want you to understand what I'm teaching. So this is first leg, second leg, that leg, that touch. So the neckline is here. The neckline is here. So let me just draw that. I want you to understand and see. Teach yourself to see this. Teach yourself to see this. If you can see what I'm teaching you, if you can understand what I'm teaching you for free, guys, you will learn, you will know how to trade for free. Let no one ask you money to teach, okay? To teach you. So that is the neckline. That is the neckline. Are you together? That is the neckline. Here it is our neckline. Here it is our neckline. Are we together? So what is the way forward? What is the way forward? The way forward, if you are very patient, you shall wait for this market to break this neckline. Once it is broken, retested, let me show you. Once it is broken, retested, and then we shall aim up to this zone. That we shall buy up to that zone. If you are a very patient trader, if you are patient, okay? If you are patient, remember 99% of forex is being patient. 99% for you to be patient. Are we together? So that is how those setups I'm looking for. But if you can see clearly again, I can see inverse head and shoulder. I can see a good inverse head and shoulder here. I want you to teach yourself how to see this thing. I want you to teach yourself how to master and to identify these things, okay, before they happen. So you can see, let me draw this. So the price came like that. Please learn this thing. So tell me, what do you think? Tell me, what is this? Tell me, what is this? This is what I'm calling an inverse head and shoulder. This is what I'm calling inverse head and shoulder. Can you see, guys? Can you see, guys? This is what I'm calling inverse head and shoulder. This is what I'm calling inverse head and shoulder. So you could have bought, sorry, I've just analyzed this market. We could have bought this market from here. Our stop losses will be here. Can you see? Our stop losses, this is the head, this is the right shoulder, the neck, the left shoulder, and then this is now our what? This is now our neck. This is now our neck. This is now our neck. This one. This is now our neck. Can you see? If you are a patient trader, so this is now our neck, and we can apply everything that I've teach you here. That will be our neck, and you can see currently the price has broke our neck. This one. This is what I'm calling a neck. Currently the price has broke our neck. The price has broke our neck. Our neckline. The price has broke our neckline. Can you see? Of inverse head and shoulder. Can you see, guys? With the candle, with body candles, so the price has broke our neckline. This was our neckline, and you can see the price has broke our neckline. The price has broke our neckline, and it has retested. You can see yesterday it broke with our neckline. Yesterday broke our neckline, and today it is retesting that neckline. If the neckline will not be broken, if sellers will not break this neckline, this is a free signal, guys. If sellers will not break this neckline downside, we shall buy from there up to here as a TP1, up to our neckline of double bottom. We shall buy from that from the neckline of the inverse head and shoulder to where? To the neckline of the TP1 will be the neckline of the double bottom. Are we together? So we shall buy from there. So once I've seen, and I told you in my micro time frame, this is where I look for the setups, daily and 4 hours. Even if you go to 4 hours, you shall see the same thing I'm teaching you. You shall see the same, and it shall now be clear. It's now clear. Okay, so I want you to teach yourself. I want you to put this pair in your watching list. Can you see? It is now clear, guys. It's now clear. We had a inverse head and shoulder here. Can you see, guys? We had an inverse head and shoulder here. This is our. I wish I could have seen this earlier, so that we could have buy this. This is our neckline. This is our neckline. Can you see? The neckline was broken. The neckline was broken. Then they came back, and currently the market is on the neckline. Currently the market is on the neckline. So we are waiting. If the neckline will hold, we are waiting for it to hold, and then we are going to do what? We are going to buy to the neckline, to this region. We are going to buy to that region. Are we together? So if I can just extract that structure, tell me, what do you see? Is it not the same of is it not the same of what I have just told you? Is it not the same? This is how simple forex trading is. This is how simple forex trading is. But there will be issues. Why? We shall find that there is a lot of manipulation before the price do exactly. It might try to manipulate you, so that it will try to take off the early buyers and the early sellers. This is the right shoulder. This is our head, our neck. I wish I could have seen this pair earlier, because we could have buy from here to our neckline. Okay, our neckline. But no problem. There is always an opportunity. So we are waiting. If you can see very well, the current 4-hour candle is this one. Okay, the red one, and you can see very well sellers are unable to break it. Sellers are unable to break our neckline down below. Sellers are unable to break our neckline down below. So what we are doing, what we are waiting for, we are waiting for this to hold, and then we can do what? And then we can buy. And then you can buy. Simply, that's what I'm teaching you today. I want you to teach yourself to see and to learn. Are we together? So if we can just analyze the current price action, where it is, the current price action. Let me show you another thing. If you can analyze this setup, if you can teach yourself to see this setup, it's very easy. Okay, so the price was up. You can see it was forming higher lows, higher lows, and this was the last support. This was the last support. Okay, let me draw it with the rectangle. Let me draw it with the rectangle line. That will be our blue rectangle to simplify what? To symbolize the head and shoulder, to symbolize our support. So that will be our support with the blue. I want you to see something, guys. It has already formed another head and shoulder. I wish you can see this thing. I wish you can. Please go and teach yourself to see this thing. Please go and teach yourself. So we are guaranteed sure we are going to enter this market. This is a guarantee. This is a free signal I'm offering. Can you see? The market was there. It came. Take the liquidity here. Why? Ask yourself why. Because buyers were expected to enter here and to put their stop loss down below. So you can see there was a liquidity run. And instead the price continued. This is what I'm calling liquidity run. There was a red candle, bearish candle, and then all of a sudden the buyers took control and enter back. Okay, and you can see that is our head. The price came, form a neck, and then the current price action is forming what? It's forming a left shoulder. It has formed a left shoulder. So, and it has gone up. It has formed a left shoulder. It has gone up. Your work is to wait for this neckline to be broken. Your work is to wait for this neckline to be broken. And then we buy. If you see that thing, guys, buy from there, and then you shall target. This is a free signal I'm giving you. That will be our neckline. So our neckline, if the neckline will be broken upward, we shall enter here. But as also but again, you can enter now, and we target higher. You can enter now and you target higher, guys. That's what I wanted you to see. So we can enter now from here. You can see we can enter now from there, and then we target up to this zone as a TP1, up to that zone as a TP1. So you can see the risk management is what? Risk management is 1:3.4 or 1:2. We are risking 22 pips to get what? To get 79 or 80 pips. So simply that is around 1:4. 1:4, guys. 1:4. So that's what I wanted you to see. Please put this pair in your watching list. Put this pair in your watching list, and I know we are going to make money. Otherwise, have a blessed week. And to those who are watching in the US, I wish you a peaceful election, and let the will of God take place. Peace out, guys.